But let's bring in someone who knows much more about this than we do. We have Betsey Stevenson, professor of public policy and economics at the University of Michigan. And Betsey, it's great to see you. So we had that strong headline number. Yet we still have several companies over the last couple of weeks saying that they're either planning to lay off a number of workers or they're announcing some hiring freezes. So what's your take just in terms of the strength of the jobs market at this point?
I mean, what we see in the data is that we have record numbers of job openings that have continued. So even if that comes down a little bit, we see some companies are, no longer advertising or cutting back their advertising. We might see layoffs tick up a little bit. Layoffs right now are at incredibly low rates. I think it's hard to characterize this as anything other than a very strong labor market. And I think the really good news today, and I can imagine how frustrating it is that the markets don't see this as good news, but the good news is that companies wanted to hire a lot of people, and a lot of people showed up to take those jobs. So employment grew by 390,000 jobs. That is incredible given the pace of job growth we've already seen month after month after month. The question is, will people keep coming back to the labor force to take the jobs? And so far, the answer has been yes. Obviously, that rate of growth is going to have to slow because we're going to run out of people. But for right now, what we see is when companies want to hire, people are showing up for the jobs.
And Betsey, I want to run a statement by you. This comes from Rick Reeder of BlackRock. He said earlier today, the employment numbers for May are likely, quote, the last solid report you're going to get for a long time. Wondering if you agree with that.
I think it depends on how we define solid here. Okay. I mean, have we all changed our expectations? So we think a solid report is 400,000 jobs a month. I mean, that's an unsustainable growth rate. What we had prior to the pandemic, 150,000, 200,000 jobs a month. I mean, that's magnificent steady state growth. And so I think if what we see is the labor market come back to that strong growth we had prior to the pandemic with labor force participation getting very close to where it was prior to the pandemic, then, I think that's exactly where we want to be. I think that's the definition of a perfect landing.
Betsey, what do you think this means? Does it mean anything different just in terms of Fed policy? Could we potentially see the Fed get even more aggressive heading into the fall?
Well, I think that this report was one of these things where it's, sort of damned if you do, damned if you don't, because if it had come in weak, companies aren't hiring. Is that because companies aren't hiring, or is that because workers weren't showing up? We'd had a lot of wage growth, but not a lot of jobs being added. That might scare the Fed into thinking that the economy's too hot and there aren't the workers there. What we saw instead was companies wanted to hire a lot of people. People showed up and took the jobs, and it didn't require a lot of upward wage pressure to do it. I think that's the definition of a Goldilocks economy right now. The question is, how long can that go on for?
Well, exactly. And we have CPI coming out next week. I'm just looking at the Wall Street estimates here. 8.3%. That would be the year over year number. And then for food and energy, expected to tick down from 6.2% to 5.9%. How do you see inflation evolving in this economy, and especially with respect to the Fed?
So, the Fed's challenge is that inflation is primarily coming from supply constraints. And yet the Fed's tools are simply to try to cool our demand. The Fed can't really bring down oil prices and gas prices. What it can do is try to get us to buy less and companies to use less, which will put a little bit of downward pressure on those prices. I think the thing we're really looking at when it comes to the labor market is, are we seeing inflation coming out of industries because they cannot hire? And so far, we're not seeing that. The inflation we have in the economy, it's primarily concentrated in durable goods, in housing, and in energy. And none of that is about not being able to hire the workers to produce those things.
Betsey, from your take, because we've heard from President Biden a number of times, inflation is a top priority. He reiterated that once again earlier today. You were a member of the Council of Economic Advisors under President Obama. From your perspective, is there anything that the administration is not doing that they should be doing? Can they be doing more in order to slow the acceleration that we've seen in inflation and get it under control?
So I think some of what the administration needs to be doing is keeping an eye on where inflation might go. And that's why they need to be thinking about the labor market. I'm very worried if we start to see prices going up in things like medical care, in education services, if we see prices rise too rapidly in sort of leisure and hospitality. So that's all would be coming out of not being able to hire enough workers. What can the administration do about that? Well, it can try to increase immigration. We've had people not coming into the United States as much over the last 2 years. And so the stock of people we have from other countries is much lower, and that's causing problems in some industries. So we could work on immigration policy. We could try to particularly get our lowest wage workers back into the labor force by encouraging them with an expanded earned income tax credit. So that's another thing they could do. They should also be making sure that people can afford to get the training that we need for places where we might start to see shortages, things like community college vocational programs, where we've seen enrollments decline over the last couple of years, and that's likely to cause labor market shortages and pricing pressure down the line. I think the most important thing for them to do right now is make sure that this inflation does not continue by spilling into services.
And I want to shift gears a little bit, but also talk about a market where prices have risen very fast, which is a housing market, and people have been priced out of it. We saw mortgage rates shoot up, but they've backed off from that. Just wondering what your outlook for housing is right now.
So housing is definitely a challenge, because how does the Fed cool demand for housing? Well, it raises interest rates. Well, that doesn't make housing cheaper for you. It just means that your money, instead of going to the seller of the house, is going to the bank because you're paying higher rates. And if you're a renter, it doesn't matter what's causing the higher prices. Is it higher interest rates, or is it greater demand for housing? You're still going to pay more in rent. So I think the only solution to the housing problem is that we need to expand housing supply. I think the thing that the administration needs to be worried about is these raising interest rates. If they actually cool the construction of housing, if they cool the expansions of supply, that could be problematic. We need to make sure that housing is affordable, and the best way to do that is to expand the amount of housing that's available.
One market where you do not want to see cooling efforts. Thank you very much for stopping by here. Always good to see you. Betsey Stevenson, professor of public policy and economics at the Ford School, University of Michigan.